And I think you have to kind of take a step back and see what the biggest players in the world are doing. And the biggest players are the central banks who are massively de-dollarizing and buying commodities. And I think that's kind of the thrust that fits hand in glove with Zoltan Pozsar said. We are heading into a new era based on commodities and transparency, not opaque debt instruments and promises that seem to fall short. And I just think that this is something that will be a very, very...
You're watching Silver News Daily. Like this video and subscribe to the channel for the best news that you don't want to miss. Now let's get straight to it.
In the vast expanse of the financial markets, amidst the ebb and flow of stocks, bonds, and commodities, a glimmering opportunity is quietly forming, a potential not seen in decades, perhaps even centuries. Imagine a world where silver, often overshadowed by its more illustrious counterpart gold, surges to an almost mythical price point of $4,388. Yes, you heard me correctly. $4,388. This isn't just speculation. It's a scenario grounded in a blend of technical analysis, market dynamics, and emerging economic patterns that all point to one thing: an unprecedented rally in the price of silver that could dwarf anything investors have ever witnessed. Today, we're diving deep into this whirlwind of factors, starting with a technical formation known as the cup and handle, which signals a bullish future for silver unlike anything before. Stay with us as we unravel how, amidst market volatility, geopolitical shifts, and economic uncertainties, silver stands as a beacon for potentially astronomical gains. This journey isn't just about witnessing a financial phenomenon. It's about understanding how you, too, can be part of this historic opportunity. So before we proceed, make sure to hit that subscribe button. You won't want to miss out on how this incredible story unfolds.
Period. I don't think this time is different, by the way, but there are some differences that it's important to notice. One of them is the fact that the Fed is facing an inflation problem near term that it hasn't faced in a very long time. And so it didn't know how to deal with that, and therefore it called it transitory. It tried to say all sorts of things to avoid, calling it a long-term issue. But at the end of the day, they had to raise interest rates to levels that we haven't seen in a very long time. But not only that, but really the speed of how they act was something that really caused the yield curve inversion issue. The second thing is that usually during other recessions that we've had, you tend to see the 10-year yield fall as the Fed starts raising rates because people start having expectations that we're going to see a recession ahead. And this time was not that way at all. Basically, what happened is very stagflationary, where 10-year yields are rising. But during the 70s, the stagflation was causing 10-year yields to rise and 30-year yields to rise because of the inflation issue. Now, today, I think inflation is also a problem, but the main issue as well is the number of issuances of treasuries that are happening in the market that are also causing the upper pressure on yields in the long end. And so, it's a little bit of a different dynamic in that front, but I still think that, the fact that we have seen 15 months, as you pointed out, consecutive months of this yield curve inversion problem, one way to play the recession idea and one way to play the end of that would be betting on a steepening of the yield curve. And then people start thinking, wow, but should I, do you think that that's because the 2-year yield is going to fall further, or the short term is going to fall further, or the long? It doesn't matter. If it's steepening, that's all that matters. And so to me, that's not an easy trade. There's no easy trades out there, but it's something that sounds very plausible, just given the fact that, first of all, we've seen such a long period of inversions, and also knowing that we this frothiness and people being so bullish, may actually cause a recession here soon, and a steepening of the yield curve actually be in line with that. So I think it's one way to play even the reemergence of inflation. I can't see the 10-year yield not outpacing the 2-year yield, because the Fed is trapped at the end of the day, and the Fed can't raise rates too much on the short end. So I would suspect that the long end would actually rise even further. So there's a lot of ways to play this steepening of the yield curve that really sounds very attractive to me. I mean, you always want to look for optionality when you have an idea, and I think this one has a lot of optionality.
As we embark on this journey through the labyrinth of financial markets, with their twists and turns, it's crucial to understand where we stand today. The current state of silver, a metal both precious and industrious, has recently caught the eye of investors and analysts alike. Amidst a backdrop of a weakening U.S. dollar and the easing of geopolitical tensions, silver has seen a sharp rise, touching $22.70. This isn't just a number, it's a beacon, signaling a shift in the economic winds that could very well lead to the treasure trove that is the $4,388 silver rally. Why is this significant, you might wonder? The value of the US dollar plays a critical role in the pricing of precious metals, including silver. A weaker dollar makes silver cheaper for holders of other currencies, thus increasing demand. In the intricate dance of global finance, every step, every movement matters. The recent developments, such as the expected ceasefire between Israel and Palestine, not only contribute to a decrease in the safe haven appeal of precious metals, but also to the intricacies of their valuation. But there's more to this story. The anticipation surrounding the United States Core Personal Consumption Expenditure, PCE, price index data for January is palpable. This data, a key indicator of inflation, holds the power to influence the Federal Reserve's decisions on interest rates. A higher-than-expected inflation rate could postpone the Fed's plans to cut rates, casting a long shadow over the economy. Yet, for silver, this could be a silver lining. The prospect of delayed rate cuts, amidst inflationary pressures, creates a fertile ground for precious metals to thrive. Let's not forget the words of Kansas City Federal Reserve Bank President Jeffrey Schmid, who pointed out the tight labor market conditions and a decent demand outlook, suggesting a pause in the rush for rate cuts. This is not just economic jargon. It's a piece of the puzzle in understanding the potential rally in silver prices. Now let's delve deeper into the technical analysis that has sparked discussions and debates across financial forums. The silver price finds itself dancing above the 20-period exponential moving average, EMA, a signal that traders and investors closely monitor. This, combined with the Relative Strength Index, RSI, oscillating in a consolidation range, sets the stage for what could be a significant breakout. At this juncture, it's essential to pause and reflect. The movements in the silver market are not just numbers on a chart. They are the culmination of global events, economic policies, and market sentiment. As we explore further, remember, the journey to understanding the potential $4,388 silver rally is not just about observing. It's about engaging, questioning, and most importantly, seeing the opportunities that lie beneath the surface. In this era of information overload, it's easy to get lost in the noise. But here, we aim to sift through that noise, to bring you insights and analyses that matter. As we venture into the technical and market dynamics that could propel silver to new heights, we'd invite you to join the conversation. What are your thoughts on the current state of silver? Do you see the potential for a rally as we do? Share your perspectives in the comments below, and let's foster a community of informed and engaged investors. Together, we'll navigate through the uncertainties and opportunities that the financial markets present. And remember, in the world of investing, knowledge isn't just power, it's profit. So hit that subscribe button if you haven't already, and let's continue this journey together, exploring the possibilities that lie ahead in the silver market.
We had such a strong rally in equity markets recently. And if you look back into 1929, before that big crash, we saw something very similar. And people tend to say, well, even the early 2000s, what happened was we had this concentration as well in markets where most of the mega cap companies are carrying the indices. And then, those things just started to fall apart in March of 2000. And then later part of that year, what happened was Russell 2000 and the rest of the market began to actually catch up and go up. And so you're starting to see that broadening of the breadth of the market. Think about that. You're probably looking at it and you're saying, well, this is very bullish, right? Because, now you're seeing all these other industries that have lagged now actually starting to catch up to what technology did, 3 months, 4 months ago. And guess what? That was the very top of the market. So it's so important to look at those prior bubble territories to see how things really played out during those environments. And 1929 was another one, of course. So things are different. Gold was pegged at that time. So think about the monetary dilution policies we have today relative to those times. It's shockingly different. Now, there are some similarities that we should also pay attention to. The wealth gap problem is a great one. The concentration of mega caps is another very important one. The leverage is another important one in the system outside of the government. Is a very good one too. So I don't necessarily pinpoint that's the time in history you should be watching for, but there are things that you should be at least aware of in case things are unfolding similarly today. Now, you asked me other things. I mean, the yield curve inversion from being deeply inverted and now de-inverting, well, that's usually a sign of a recession ahead. The labor market's starting to show some issues. Yeah, that's also a sign of things that are probably about to turn. The fact that we're seeing all the small cap companies that represent well the economy completely having a very different performance relative to mega caps, that's also something very telling. So, I think that this the construction of the market is shifting in a large way, and it's scary. Seeing the semiconductor businesses today in terms of the weight in the market, retesting periods like we saw back in the bubble of the early 2000s of the technology bubble. Those things are they don't end well usually. And so I just don't know. I don't have the crystal ball when things are going to pop. But, would I be putting my capital today to, for the long term and closing my eyes to see where things are going to be 5-10 years from now? No way. I think there's better things to be putting their capital towards. And I think natural resource companies are going to be proven to be one of those segments of the markets that are likely to be doing very.
As we delve deeper into our exploration of silver's burgeoning potential, we encounter a phenomenon that's catching the eyes of seasoned investors and analysts alike: the cup and handle formation on silver's price charts. This isn't just any technical pattern. It's a herald of bullish prospects, a signal that the tides may be turning in favor of those who patiently awaited silver's moment in the financial spotlight. Today, we unravel the mysteries of this formation and why it's pivotal in understanding the potential for silver to reach, or dare we say, surpass the $4,388 mark. The cup and handle formation, for those unfamiliar, is a classic bullish signal in the world of technical analysis. Imagine, if you will, the silhouette of a teacup. First, the cup forms as prices gently dip, and then rise back up to the starting point, followed by a slight downward drift creating the handle. This pattern signals consolidation and is often followed by a significant breakout, as pent-up buying pressure finally finds its release. But why does this matter for silver? The answer lies in the undercurrents of market psychology and the dynamics of supply and demand. When silver forms a cup and handle, it indicates a period where skepticism begins to wane, and the initial bullish sentiment that led to the first rise in price is confirmed. The handle's slight decline, it's a final shakeout of doubters, after which the true believers are rewarded as the price breaks out, setting the stage for significant gains. In the context of Tavi Costa's insights and the broader economic landscape, the cup and handle formation in silver's pricing chart isn't just a curiosity, it's a beacon signaling the potential for unprecedented growth. It suggests that despite the volatility and the myriad factors influencing the precious metals market, silver stands on the brink of a rally that could redefine its role in the portfolios of investors worldwide. Let's break down this formation further. The cup part of this pattern typically represents a period of consolidation and accumulation. Investors who recognize the pattern early begin to accumulate silver, betting on its long-term prospects. The handle, with its slight downward trend, offers a final opportunity to enter the market before the breakout. This phase is crucial. It's the calm before the storm, where the groundwork is laid for the explosive growth that follows. For silver, this technical analysis doesn't exist in a vacuum. It's supported by a confluence of factors, including a weakening US dollar, easing geopolitical tensions, and shifting economic indicators. These elements, when combined with the technical bullish signal of the cup and handle formation, paint a picture of a metal poised for a significant rally. But here's where it gets even more interesting. The implications of this formation stretch far beyond just a price increase. They suggest a shifting paradigm in the investment world. Silver, often seen as gold's lesser sibling, is now signaling its readiness to shine, to break free from the shadows and claim its spot in the limelight. As we ponder the significance of this formation and its timing, we're reminded of the broader economic uncertainties that loom over global markets. In these times, the allure of precious metals, particularly silver, becomes increasingly hard to ignore. The cup and handle formation isn't just a sign. It's a clarion call to those looking to navigate the tumultuous waters of the financial markets with a steady hand and a keen eye for opportunity. In closing, the question isn't just whether silver will rally, it's how far and how fast. With the technical and fundamental stars aligning, the stage is set for a performance that could very well see silver taking center stage in the financial theater. The cup and handle formation is our guide, a roadmap to what could be one of the most lucrative journeys in the realm of precious metals investing. So as we continue on this journey, let's keep our eyes on the charts, our minds open to the possibilities, and our portfolios ready for the opportunities that lie ahead. The story of silver is unfolding, and it promises to be a tale of resilience, revival, and remarkable returns. Stay tuned, stay invested, and as always, keep looking for those patterns that tell a story not yet fully written. Remember, in the world of investing, the bold and the informed lead the charge. Let's be both.
Going to change. And as we see treasuries becoming less and less of a good diversifier for those portfolios, I believe that gold is going to be entering the arena and starting to become a larger and larger percentage of those defensive allocations in portfolio construction. And so that's one side of it. And the other side of it would be central banks, because if we do the same calculation on central banks, they also own, before, in the past used to be 70%, over 70% of their balance sheets used to be gold. And now it's less than 20%. So that has a lot of room for change. We know that central banks have been buying record amounts of the metal. But when you put it into a historical perspective, there's a lot of room for that to grow. And so, I like stories, or I like investment ideas that have that alternative and large percentage of ways to for your thesis to play out. And I can't think of a better one than precious metals, because you have the 60-40 portfolios being pressured to change their allocation. You have the central banks doing the same. You have the skepticism across, the globe, really, towards the metal. You have most people focus on crypto now, and crypto basically is NASDAQ, right? It's the same trade. I mean, if you look at Bitcoin and NASDAQ, is no difference, especially in the last 3 years. And so I think that that's all linked. And to me, it's a much better opportunity to be a buyer of metals here, because I think that price change will be very meaningful in terms of changing the multiples of businesses that have that leverage towards the gold and precious metals overall. And as we see that occurring, I think it's going to create a lot of a great generational wealth opportunity.
As we venture further into the saga of silver's potential ascent, it's pivotal to shift our gaze towards an often overlooked segment of the precious metals market, the gold miners, particularly those involved in silver mining. Despite the glittering prospects for silver itself, the companies responsible for extracting this lustrous metal from the Earth's embrace have not mirrored silver's shine in their valuations. Today, we delve into the undervaluation of gold miners in the context of silver's bullish horizon and uncover why this discrepancy presents a golden opportunity for astute investors. The narrative surrounding gold and silver miners is as complex as it is intriguing. Historically, these entities have served as a leverage play on the metals themselves, with their valuations often magnified in response to movements in metal prices. Yet despite the favorable winds filling silver's sails, gold miners with significant silver production have languished in valuation, seemingly disconnected from the metal's bullish technical and fundamental indicators. This divergence is not just a matter of market oversight, it's a reflection of broader economic and market dynamics at play. The undervaluation of gold miners in the face of rising silver prices is emblematic of the market's myopic focus on immediate yields over long-term value. In a world where the allure of quick gains often overshadows the patience required for substantial returns, gold miners have become the unsung heroes of the precious metals saga, awaiting their moment in the spotlight. Tavi Costa's discourse on the potential for volatility and growth in the precious metals market sheds light on this anomaly. The bullish outlook for silver, underscored by technical patterns like the cup and handle formation, suggests not just a rally in silver prices, but a renaissance for precious metals at large. Yet, the stocks of companies mining these metals remain undervalued, a paradox that savvy investors are beginning to notice. The reasons for this undervaluation are multifaceted. Concerns over rising operational costs, particularly energy prices, have cast a shadow over the mining sector. Moreover, the general market's overvaluation, coupled with the shift towards more speculative investments, has left traditional sectors like mining in the dust. However, as Costa points out, these concerns may be overblown, overlooking the fundamental strengths and the leverage miners have over the price movements of the metals they extract. In this landscape of undervaluation and market myopia, the discerning investor finds a fertile ground for opportunity. Gold and silver miners, particularly those with a robust portfolio of assets and a proven track record of operational efficiency, stand as beacons of potential in a sea of overvalued assets. Their current undervaluation not only presents a buying opportunity, but also a chance to capitalize on the eventual re-rating of these companies as the market awakens to the realities of silver's bullish future. As we peel back the layers of the market's current sentiment towards gold miners, it becomes increasingly clear that this sector's undervaluation is not a sign of inherent weakness, but a temporary misalignment with the broader trends shaping the precious metals market. The dynamics of supply and demand, the technological advancements driving new uses for silver, and the macroeconomic factors fueling interest in precious metals all converge to paint a bullish picture, not just for silver, but for the companies that bring it to the market. In conclusion, the undervaluation of gold miners in the context of a bullish outlook for silver is a narrative rich with irony and opportunity. For those willing to look beyond the surface, to understand the intricate dance between metal prices and miner valuations, lies the potential for substantial rewards. As silver continues its march towards unprecedented highs, the miners responsible for its journey from the earth to the market stand ready to emerge from the shadows, offering a compelling investment thesis for those attuned to the nuances of the precious metals market. As we continue our exploration of silver's potential rally and the broader implications for the precious metals market, let's not overlook the miners. Their story is not just a footnote in silver's tale, but a critical chapter in understanding the full scope of the opportunity that lies ahead. Stay tuned, stay informed, and most importantly, stay poised to act on the insights that the undervaluation of gold miners presents in this unfolding saga of silver's ascendancy.
I think we're likely going to be into another one of those, and so I like to be buying Brazilian equities in South America. Overall looks very attractive, relative especially to the US. If you can see that trade in very different ways. And one of the main reasons why we've had this discount of prices during across emerging markets relative to developed economies, and particularly US, has to do with a lot of things. It has to do with political risk, which won't change, by the way. We just likely to see markets prioritize other things instead of the political risk. No, I'm not expecting the political risk to change at all. That in the early 2000s, emerging markets are a great opportunity, although the political environment was crappy. It was terrible. Lula was the president of Brazil in the early 2000s, and guess what? Brazilian markets went up 18-fold. So there are times when the markets change what they prioritize, and I think that we're going to be entering another one of those. One of the things that it's in line with what really caused this underperformance recently, it has to do as well with what I think is the quality of labor markets. And recently we're seeing what I call this AI paradox, where a lot of people are thinking that big tech, big companies are going to be always benefiting from all this. I actually think that the fact that those AI tools are really true capability enablers, and in a way where it's allowing companies that used to have a whole team to work with, and now you're seeing some of those tools helping smaller companies with small amount of employees to basically have all sorts of incredible assistance for free. And that's a huge change in this in the labor markets, because if you extrapolate the same thesis into emerging markets and you start thinking, look, today I use ChatGPT all the time, and I basically have a geologist, a chemistry, a historian, all sorts of assistants working for me for free. It really isn't. I have a programmer, a mathematician. I mean, all those things. I mean, I can ask any question. And so, back in those days with emerging markets, didn't have that. So the gap of the quality of labor was massive. Now think about that actually closing, not completely, but closing significantly. And what does that do? Does that make those emerging market companies a lot more competitive? I think it does. And not only that, those multiples differentials between a business in Brazil versus in the US, I think they're going to be at least a lot smaller than what it is today, which is at historical levels. And so that's just my 2 cents on how this whole thing will probably, this dynamic.
As our journey through the gleaming prospects of silver and the undervalued bastions of gold miners unfolds, we now steer our exploration towards a terrain marked by shadows and whispers of caution, the landscape of market overvaluation, and looming economic risks. This segment, pivotal in understanding the full spectrum of forces at play, will delve into how these broader economic signals not only frame the backdrop against which silver's potential rally must be viewed, but also highlight why, in times of turbulence, the luster of precious metals shines brightest. In the realm of investing, the specter of market overvaluation looms large, casting long shadows over the exuberance of bull markets. Tavi Costa's insights into the concerns surrounding market overvaluation serve as a clarion call to investors, urging a revaluation of where true value lies in an inflated landscape. The stock market, buoyed by years of low interest rates and expansive monetary policy, has soared to heights that leave many veterans of finance wary. The valuations we see today, disconnected from traditional metrics of financial health and profitability, suggest not just optimism, but a detachment from economic realities. This dissonance between market valuations and economic fundamentals is not merely an abstract concern, but a tangible risk. That historical precedents are clear. Markets that ascend too high, too fast, are often subject to corrections, sometimes harsh and swift. The implications for investors are profound. In an overvalued market, the search for value becomes paramount, leading savvy investors to consider assets that have been overlooked or undervalued, among them precious metals like silver and the companies that mine them. But why do precious metals, and silver in particular, beckon in times of economic uncertainty and market overvaluation? The answer lies in their intrinsic qualities as stores of value, as hedges against inflation, and as assets uncorrelated with the vicissitudes of stock markets. Silver, with its dual role as both a precious and an industrial metal, offers a unique proposition. Its value is not only derived from investor sentiment, but is underpinned by real, tangible demand across a spectrum of industrial applications, from electronics to renewable energy. The concerns about market overvaluation are compounded by the array of economic risks that shadow the current financial landscape. These risks, from geopolitical tensions to the specter of inflation, from the fragility of global supply chains to the uncertainties posed by shifting monetary policies, all contribute to a milieu where the safe haven appeal of precious metals becomes increasingly compelling. As Costa elucidates, these economic signals, be it the inversion of the yield curve or the tightening of credit markets, serve as harbingers of potential shifts, prompting a revaluation of risk and the diversification of portfolios. In this context, the bullish outlook for silver, underscored by technical formations and bolstered by fundamental analyses, stands as a beacon for those navigating the choppy waters of today's financial markets. The potential for volatility in precious metals, far from being a deterrent, is an invitation to leverage the inherent uncertainties of economic cycles for potential gain. As we dissect the concerns about market overvaluation and the looming economic risks, it becomes evident that these are not just challenges but opportunities to reassess, to recalibrate, and to reposition. The allure of silver, in this light, is not just in its potential for price appreciation.
I mean, I've gold to silver ratio today, it's over 85, which historically, every time we've seen that, it actually coincided with periods when you want to be buying silver, not selling. There are some really outstanding opportunities out there with important projects that have been already operating mines with great silver production profiles that will offer even better economics as we see silver prices breaking out. So my focus right now has been solely in that front. And, I don't think this is the time. The fact that it hasn't happened yet, that breakout from that cup and handle, doesn't mean you should be discouraged and changing your focus. I think this is the time when you want to be extremely laser focused on this opportunity. And given the fact that we're all waiting for a moment where gold really breaks out more decisively, and as we see that happening, I think that that's going to drive not only attract capital into this industry, but really I believe silver is going to lead to the upside in a big way. And so, precious metals to me is the main focus. And so I really want to make sure.
As we navigate through the tempestuous seas of market overvaluation and economic uncertainty, our compass points us towards the often overlooked harbors of alternative investment opportunities. In this segment, we delve into the strategic foresight Tavi Costa shares about diversifying into realms that not only promise refuge, but also the potential for growth amidst the storm. This exploration is not just about hedging against volatility. It's about identifying and capitalizing on the unique opportunities that arise in times of economic uncertainty. In an era where traditional markets teeter on the brink of overvaluation and the economic signals flash warning signs of potential downturns, the allure of precious metals like silver becomes ever more compelling. Yet, Costa's insights remind us that the prudent investor's gaze should not be fixed solely on these shiny assets. The landscape of alternative investments, ranging from emerging markets to natural resource companies, from real estate to technology startups, presents a mosaic of opportunities that, while diverse, share a common thread. They offer a hedge against the vulnerabilities of overvalued equity markets and the unpredictable shifts of global economies. Emerging markets, with their untapped potential and growing middle classes, stand as beacons of growth in an otherwise sluggish global economy. While these markets come with their own set of risks, including political instability and currency fluctuations, they also offer the promise of higher returns. These regions are not just growing economically, they are increasingly becoming centers of innovation and technology, sectors that are voracious consumers of precious metals like silver, further intertwining the fate of these investments with the bullish outlook for the metal. Natural resource companies, particularly those in the mining sector, are another cornerstone of alternative investment strategies in times of economic uncertainty. These companies, especially those focused on the extraction and production of precious metals, offer a direct link to the commodities that historically flourish in periods of inflation and currency devaluation. The undervaluation of gold and silver miners, as previously discussed, underscores the opportunity to invest in companies that stand to benefit from the metal's potential rally, thereby offering a twofold advantage: exposure to the anticipated appreciation in metal prices, and the operational leverage that mining companies typically enjoy during commodity bull markets. Furthermore, Costa's emphasis on vigilance and diversification resonates deeply in the current context. The principle of diversification is not merely about spreading risk across different asset classes. It's about strategically positioning one's portfolio to capture the upside in various market scenarios. This approach is particularly pertinent in light of the economic uncertainties that loom large on the horizon. By including assets that are uncorrelated with the broader equity markets, investors can not only mitigate the impact of market downturns, but also capitalize on the growth opportunities that these alternative investments present. In summary, the journey through the volatile landscapes of today's financial markets demands more than just caution. It requires a proactive exploration of alternative investment opportunities. The bullish outlook for silver, set against the backdrop of economic uncertainty and market overvaluation, serves as a compelling narrative for the strategic diversification of investment portfolios. As we chart our course through these turbulent times, let us not lose sight of the diverse opportunities that lie beyond the traditional realms of investment. The key to navigating this era of uncertainty is not just in seeking safe havens, but in embracing the spectrum of opportunities that diversification offers, thereby ensuring that our portfolios are not only resilient but also poised for growth. As we move forward, remember, the essence of investment in times of uncertainty is not just to survive the storm, but to emerge stronger, with a portfolio that's not just diversified, but dynamically aligned with the evolving economic landscape. Let's continue this journey with an eye for opportunity, a commitment to diversification, and a strategy that embraces the full potential of alternative investments amidst the complexities of today's global economy. As we draw closer to the apex of our exploration into silver's burgeoning potential amidst a backdrop of economic flux, it's imperative to address the pivotal catalysts that could propel silver into the spotlight of the financial stage. Building upon the historical precedents and current market dynamics discussed earlier, this section aims to crystallize the circumstances and factors that could lead to the unprecedented rally in silver prices that Tavi Costa and others envision. At the heart of the potential surge in silver prices lies the fundamental principle of supply and demand. The industrial demand for silver is set to skyrocket, driven primarily by its indispensable role in emerging green technologies, including solar panels, electric vehicles, and 5G technology. These sectors stand at the cusp of exponential growth, fueled by global initiatives towards sustainable energy and infrastructural modernization. Silver's unparalleled electrical conductivity, thermal conductivity, and reflectivity make it a non-substitutable component in these applications, thereby ensuring a sustained and growing demand for this precious metal. Concurrently, the supply side of silver presents a scenario ripe for price escalation. Silver mining outputs have plateaued, if not declined, in recent years, a trend exacerbated by operational disruptions caused by the global pandemic. The lead time for bringing new silver mines into production, coupled with the declining grades of existing mines, suggests that supply constraints are likely to become increasingly pronounced. This imbalance between growing demand and constrained supply sets the stage for significant price appreciation. Monetary expansion and the resultant inflationary pressures serve as another critical catalyst for silver's potential rally. The unprecedented levels of fiscal stimulus and monetary easing undertaken by central banks worldwide, in response to the economic fallout from the COVID-19 pandemic, have sown the seeds for inflationary pressures that could erode the value of fiat currencies. Historically, precious metals, including silver, have served as hedges against inflation, preserving purchasing power in ways that fiat currencies cannot. As inflationary pressures mount, the appeal of silver, both as an investment and a store of value, is likely to surge, drawing both institutional and retail investors towards it. The investment landscape for silver is undergoing a transformation, fueled by the democratization of financial markets and the advent of digital investment platforms. The ease of investing in silver, whether through physical metals, exchange-traded funds, ETFs, or mining stocks, has opened the floodgates to a broader base of investors. Additionally, the speculative interest in silver, driven by social media and investment forums, has demonstrated the ability to trigger swift and substantial movements in silver prices. As awareness of silver's fundamental strengths and potential for substantial returns grows, the influx of investment and speculative demand could serve as a powerful catalyst for price rallies. Finally, the backdrop of geopolitical tensions and economic uncertainties cannot be overlooked as a catalyst for silver's ascent. In times of geopolitical strife and economic instability, investors gravitate towards safe haven assets like precious metals. The ongoing uncertainties surrounding global trade, political tensions, and the fragile state of post-pandemic economic recovery amplify silver's allure as a haven asset. In weaving together these threads, we arrive at a compelling narrative for silver's potential rally. The confluence of these factors, each potent in its own right, creates a scenario where the bullish prospects for silver transcend mere speculation and anchor themselves in tangible economic and market realities. As we stand on the precipice of what could be one of the most significant rallies in the history of precious metals, it's essential for investors to remain vigilant, informed, and strategic in their approach. The potential for silver to reach unprecedented price levels is not only a testament to its enduring value and versatility, but also a reminder of the dynamic interplay between macroeconomic forces and market sentiment. In this context, silver's journey is not just a reflection of its intrinsic merits, but a barometer for the broader economic and financial landscapes. As we conclude this exploration, let's remember that the story of silver is still unfolding, inviting us to witness and participate in a historic financial event. For those prepared to navigate the complexities of the precious metals market, the coming chapters in silver's saga promise not just volatility, but unparalleled opportunity.
Look, I think there's a lot of things to unpack there. Number one, yes, miners are extremely undervalued right now. If you look at the GDX ETF, it's sort of not telling the true story because royalty companies have kept their ground quite well relative to the miners overall. But if you look at miners like Newmont, they're down over 60% from their peak recently. And that's, reminiscent of other periods like the global financial crisis, in which it declined quite a similar number, actually, about 67% from peak to trough. And so if you look at the fundamentals, they haven't drastically changed in the last 2 years or so. Well, the big changes, if you see, is companies are still doing more and more shareholder-friendly policies, such as specialty dividends. Some of the miners are now paying more dividends than the utility companies. Utilities, for those who don't know, is a proxy for treasuries. People buy those companies in order to receive yield. And knowing that a lot of those yielding instruments are actually lower than miners, which carry a lot of capital-intensive properties and other things, it is very telling of how conservative those companies have been in the mining space in order to attract investors to invest in their companies. But from a usual, argument regarding the miners is the fact that we're seeing production costs rising substantially. The problem with that analysis is that people immediately then link that to energy prices, and then link that back to oil. And if you looked at, now I saw somebody else commenting on one of my tweets regarding how, you want to be buying the miners when the gold to oil ratio is declining. And that sounds plausible, right? Unless you really understand the mining industry. And if you do understand it, you will see that energy costs, despite the fact that it's something significant, it's not all the main factor you should be focused on. In fact, the prior bull market we had in the mining space, which was the early 2000s, a sustainable bull market that we had, the gold to oil ratio was actually falling, not rising. And so, that to me is very telling, where yes, there are some projects and specific companies that are very linked to oil prices, but the overall industry is not. And you may see, I'm very bullish on oil. Does that make me bearish on the miners? No. In the 70s, you should have been buying both, with your portfolio. And so to me, this is sort of similar in that sense. And then not just the 70s, the 1940s, the 1910s, all those 3 decades, which are highly inflationary decades, you wanted to be buying hard assets and hard assets businesses. And so, which ones are those? Well, energy is one of them, and the miners is another one. And so, I think people are overthinking. Just because we've had a bull market in energy that wasn't really mapped by and accompanied by the mining space, it doesn't necessarily mean that the mining industry is in a terrible state or anything like that. And
in the grand tapestry of financial markets, where myriad threads of economic indicators, investor sentiment, and geopolitical events intertwine, the narrative of silver's potential rally stands as a compelling testament to the intricate dance between fundamental value and speculative fervor. This narrative, enriched by historical precedents, current market dynamics, and projections of future demand, culminates in a profound understanding of the forces at play in the precious metals market, particularly for silver. The journey to this juncture, where the anticipation of a significant rally in silver prices captures the imagination of investors and analysts alike, underscores a broader theme of resilience and opportunity amidst uncertainty. Silver, with its dual role as an industrial commodity and a precious metal, embodies the intersection of technological innovation and timeless value, serving as a beacon for those seeking to navigate the complexities of today's global economic landscape. The potential for silver to embark on an unprecedented rally is not merely a matter of speculative interest, but a reflection of deeper economic currents. The expansion of green technologies, the relentless pursuit of sustainable energy solutions, and the digital revolution in financial markets converge to create a fertile ground for silver's ascendancy. This convergence is further amplified by the macroeconomic environment characterized by low interest rates, expansive monetary policies, and the specter of inflation, all of which bolster the case for precious metals as both hedges against economic volatility and vehicles for speculative investment. As we gaze into the horizon, the potential rally in silver prices emerges as a symbol of the broader shifts in the global economy and the investment landscape. It represents a confluence of historical cycles, technological advancements, and economic policies that together shape the contours of the market for precious metals. The allure of silver, therefore, extends beyond its immediate investment potential to embody the broader dynamics of supply and demand, innovation, and economic resilience. In this context, the narrative of silver's rally transcends the confines of financial analysis to touch upon the fundamental principles of value, growth, and sustainability. It invites investors to reconsider not only their investment strategies, but also their understanding of the role of precious metals in a rapidly evolving world. Silver, in its gleaming splendor, offers a window into the future of investment, where the traditional distinctions between commodities and currencies, between industrial assets and stores of value, blur in the face of global economic transformations. As we conclude this exploration, the story of silver's potential rally leaves us with a sense of anticipation, a vision of what might be possible in the realm of financial markets. It challenges us to think broadly, to consider the interplay of economic forces and market dynamics, and to remain vigilant in the face of uncertainty. For those prepared to embrace the complexities and opportunities of the precious metals market, the saga of silver offers not just a tale of potential gains, but a narrative rich with insights into the nature of value, investment, and economic resilience in the 21st century. Thus, as we stand at the cusp of what may be a historic movement in the price of silver, it is a moment not just of speculation, but of reflection on the enduring principles that guide investment decisions in an interconnected world. Silver's journey, marked by volatility and promise, serves as a testament to the enduring allure of precious metals and the perpetual quest for value in the vast expanse of the financial markets. With the comprehensive exploration of silver's potential rally and the intricate web of factors influencing its market dynamics concluded, we now find ourselves at the culmination of our journey, the apex where all threads converge to paint a picture of possibility and strategic foresight for investors navigating the volatile terrains of the precious metals market. This juncture is not merely an end, but a vantage point from which to gaze into the future, armed with insights gleaned from historical analysis, current market trends, and economic indicators. The story of silver's potential ascent to unprecedented heights is more than a narrative of speculative interest. It's a beacon for understanding the broader implications of global economic shifts, technological advancements, and the evolving landscape of investment opportunities. The anticipation of a significant rally in silver prices, fueled by a confluence of supply constraints, burgeoning industrial demand, expansive monetary policies, and the growing allure of precious metals as hedges against inflation and economic uncertainty, presents a compelling case for investor attention. This scenario, underscored by the technical patterns and market sentiments explored, highlights not just the potential for lucrative returns, but the importance of strategic investment in a world where traditional financial paradigms are being challenged and reshaped. Investors, whether seasoned veterans of the precious metals market or newcomers drawn by the allure of silver's promise, are encouraged to approach this opportunity with a blend of caution and optimism. The lessons from history, the realities of the present market, and the projections for future demand and supply dynamics all point towards the potential for silver to play a pivotal role in diversified investment portfolios. Yet, this opportunity also calls for vigilance, for the markets are fickle, and the forces that drive prices are subject to sudden shifts in response to global economic events, policy changes, and investor sentiment. As we stand on the threshold of potential historic movements in the silver market, it's imperative for investors to not only consider the immediate prospects for gains, but to also reflect on the long-term implications of their investment choices. The story of silver is interwoven with the themes of sustainability, technological innovation, and economic resilience, offering a lens through which to view the challenges and opportunities of investing in a rapidly changing world. In this light, the potential rally in silver prices serves as a reminder of the importance of remaining informed, adaptable, and strategic in investment decisions. It underscores the value of diversification, not just across asset classes, but within the realm of precious metals themselves, recognizing the unique attributes and roles of silver in the broader economic and technological landscapes. As we conclude this exploration, let us carry forward the insights and perspectives gained, using them as a guide in navigating the complex and rewarding world of precious metals investing. The journey of silver, with its mix of volatility and promise, is emblematic of the broader journey of investment in an era of global economic transitions and uncertainties. It offers a compelling chapter in the ongoing saga of the financial markets, one that invites continuous learning, strategic thinking, and a keen eye for the opportunities that lie hidden within the challenges of our times. In the end, the story of silver's potential rally is not just about the metal itself, but about the broader narrative of investment in a world poised on the brink of significant change. It challenges us to think deeply, act wisely, and embrace the possibilities that the future holds. Having traversed the vast landscape of silver's potential rally, encompassing its historical precedents, current dynamics, and future possibilities, we reach a point of reflection and forward-looking anticipation. This journey has not only illuminated the intricate interplay between economic forces and market sentiment, but also underscored the strategic considerations essential for navigating the precious metals market, particularly silver, with acumen and insight. The prospect of a significant rally in silver prices, underpinned by robust demand in green technologies, constrained supply scenarios, expansive monetary policies, and the metal's intrinsic value as a hedge against inflation, presents a nuanced opportunity for investors. This scenario beckons with the promise of returns yet cautions with the specter of volatility, embodying the dual nature of investment opportunities in the realm of precious metals. For investors, the journey ahead requires a balanced approach, blending optimism with prudence. The insights garnered from exploring silver's potential highlight the importance of thorough research, continuous monitoring of market trends, and an adaptive investment strategy. It's imperative to remain agile, ready to respond to market shifts with informed decisions that leverage both short-term gains and long-term growth potential. The narrative of silver's ascent is a compelling chapter in the broader story of financial markets, offering lessons on the value of diversification, the importance of understanding fundamental market drivers, and the need for strategic patience. As we look towards the horizon, where the potential for unprecedented price movements in silver looms, the essence of successful investing in this domain becomes clear. It's not merely about capitalizing on immediate opportunities, but about crafting a diversified, resilient portfolio that can weather the uncertainties of the future. In closing, the exploration of silver's potential rally serves as a microcosm of the larger investment landscape, rich with opportunities yet fraught with challenges. As investors, our task is to navigate this landscape with a keen eye for value, a deep understanding of market dynamics, and a commitment to strategic, informed decision-making. The story of silver, with its blend of historical significance and future promise, offers a blueprint for approaching investments in precious metals and beyond. As we move forward, let us carry the insights and perspectives gained from this journey into our broader investment endeavors. The world of financial markets is ever evolving, shaped by global economic trends, technological advancements, and shifts in investor sentiment. In this context, the potential rally in silver prices is not just an isolated event, but a window into the complexities and opportunities of investing in a changing world. Investors who approach the market with a blend of caution, curiosity, and strategic foresight are those who will not only navigate the volatility and uncertainties inherent in precious metals investing, but also seize the opportunities that these conditions present. The journey of silver, from its historical roots to its future prospects, encapsulates the essence of investment in the modern era, a blend of art and science, risk and reward, tradition and innovation. As this exploration concludes, the dialogue around silver and its place in the investment landscape continues. The potential for a significant rally in silver prices, reflective of broader economic and market trends, remains a topic of keen interest and spirited discussion among investors, analysts, and enthusiasts alike. In this ongoing conversation, the perspectives and analyses shared here serve as a foundation for further inquiry, debate, and strategic investment decisions, marking not an end, but a waypoint in the ever-unfolding saga of the financial markets.